Today's number is 1. That's the record amount in billions of dollars that just went into exchange traded funds for Ethereum and some other cryptos. But why should we be paying attention as traders and investors? Well, in today's video, we'll break down whether you're a bull or a bear in today's markets and why this chart and this one need to be watched right now. Did we just see inflation figures trigger one of the biggest moves that could be happening in terms of a short squeeze? Well, one thing's for sure, it'll all come back to the ratios and some massive dark pools. We've got all of that coming up in today's show. What are Wall Street up to? Let's check it out right now together. See you guys soon. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we've got those dark pool transactions coming our way again. Secret Wall Street transactions did go through. Some of them are massive, and we'll be talking about it along with our normal macro and, of course, technical charts and options flows. If it's your first time here, welcome to one of the largest daily shows on the planet when it comes to markets. If you love them like we do, then, of course, subscribe and hit that bell icon as we do cover it daily. Let's bring off the kind of big discussion here of inflation and whether this was a good or bad result. Basically, it was in line with what the street thought, which was that there were increases across the board, but they weren't above the expectation. So the market said, you know what, this is fantastic. We're going to get an interest rate cut. And really where the problems still lie in all of these inflation figures are the sticky issues. Shelter was up, food away from home was up, and medical care services were, as you guessed it, up. So where did we see the benefits? Well, it was mostly in energy and utilities. And as you guys know, what that's telling us is we're probably going to get an interest rate cut. But I want to read you something first, which is a pretty wild statistic. Stocks are an all-time high. Home prices are an all-time high. Bitcoin, all-time high. Gold, all-time high. Money supply, all-time high. National debt, all-time high. Yet, we're going to see multiple Fed cuts probably just this year. JP Morgan came out and said they're going to expect 4. Of course, most of us expect 2, and so does the market. But this is wild when you also consider that Goldman Sachs has already set up that they think inflation is actually going to go up again into the end of the year, with consumer price CPI going to 3% and core going to 3.2%. So it's a pretty weird time in life when you think about it, when you've got a strong looking market, but you've got possibly really big issues in the unemployment. Remember, the Fed is dual mandated. One of them is dealing with inflation. The other one's dealing with the unemployment problem. Have we hit kind of the iceberg? Have we hit the tipping point yet? Well, we do have a chart coming up later on today's video that may tell us when we've hit that. But for now, it was a slight uptick. And what I'm thinking, and I think a lot of you guys are thinking this as well, is that we're probably hitting the base at this point. So we're probably hit about as low as inflation is going to go. And I do agree that we're most likely going to start seeing tick ups. And the reason why this happens is you may have seen a chart we shared a long time ago, which had the 1970s overlaid with the current crisis period we had since 2022, 21, etc. And what that actually showed is that we usually base for a while, and then we see slight upticks, and then comes the cross section. Do we go hyperinflation and something terrible like a stagflation style environment, or do we just see it actually fix itself? Well, one thing's for sure, people are not trusting fiat. They're not trusting the main currency anymore, which is the US dollar, and people are moving into alts. We've been, of course, following gold. We've been following silver, and as you guys know, I love Bitcoin as well. But one that's been showing up over the last couple of months, and we've, of course, discussed it very heavily the last couple of weeks, has been Ethereum. And I'll give you guys a clap. If you've held Ethereum to here, well done for you, because that was an monster move and it had monster inflows. Take a look at this, hitting our blue line perfectly and then actually selling a little bit off this since the time of this snapshot. So have we hit a consolidation point? I would say around here is where I usually would expect Ethereum to start to slow down a little bit and to see at least a pullback in time, which for anyone that doesn't know what a pullback in time looks like is this, but it still remains in the bullish trend. Or it could be, of course, a pullback. But remember, to stop a freight train move like we've just seen, it doesn't usually just crash. Most of the time, it generally does this type of thing. Then it could sell off. And that's the story of course, more of a Wyckoff distribution, etc. Needless to say, though, this was the largest inflow ever recorded for exchange-traded funds. People went ballistic. And we have seen this type of euphoria before, and it's happened just recently, actually, on FIG. which is that IPO. Came in strong, we talked about it, went absolutely ballistic for about 2-3 sessions, and since then has collapsed. So it's not that I think Ethereum is going to do that. It's just that when you get that much intense hype and euphoria in the markets and it hits a key resistance, this is usually where you expect some type of consolidation. More on that later. Now, speaking of what really happened over the last 24 hours, it wasn't just the movement in the crypto world. It was also the movement in the sleeping one, which is the Russell 2000. Long called for being bullish for a long time by many people. This one here has been absolutely dormant for a long time. And the reason why is because most of the Russell 2000 actually don't earn money. I think it's like 37% of the companies inside there are like zombies. So what did we see happen over the last 24 hours? Well, a massive pickup. And you can see here, large speculators are the shortest they've been since 2022. And when we saw similar short levels, we actually saw basing formations for the Russell. So you can see here, when you get these types of similar short positions, often there is a little bit of juice to go in the Russell. And we've got a ratio coming up later that you'll want to look at when it comes to whether we've really seen enough movement into it to get active in what has been an underperformer for quite some time in terms of indices. Let's move over now to some intraday trades that happened. This was a big one. A couple of dark pools came in early in the session. And then, of course, we saw them close off by the end of the day. Now, that's not to really been looked into too much, but that was a nice trade, of course, by them in terms of the street or whoever did it. But we did have a couple of other big ones. We got a monster, the biggest ever, coming through, PLTU, which is a double leveraged PLTR position ETF. And this is most likely a close of some exceptional profits from these two trades here. And it was a big one happening right at the top. Now, is this important? Well, of course, what happens next will be important. Last time we saw a dip, they purchased in. Obviously, we know that was a buy. Here, you can see it broke a new high. It was a buy. Here, well, we don't know. Will it consolidate and then break a new high? Most likely it was a buy. But at this stage, look, someone's taking profit on PLTR. It's been an exceptional run. It probably doesn't make sense fundamentally, but as you guys know, it is one of the 10 stocks that have made up 80% of the gains since Liberation Day. Another one that's been interesting has been Tesla. Whether you are for or against Tesla, the main thing was we saw some monster transactions just a few weeks ago, and they have actually led into a bit of a gamma squeeze. So we have some fairly decent strength coming through, and these were all dark pools happening near the lows, and so far so good. It's actually breaking up technically at this stage. And the last one I want to mention was a monster coming in through for ARK Space and Exploration Innovation ETF. One of the biggest trades, well, the biggest trade we've ever seen here on ARK X anyway. And that came through. Is it a resistance sell? The last time we saw big ones, we consolidated for a while and we actually saw a sell-off. So again, this is the most activity we've seen in a while at around these prices. This 6,400, 6,450 S&P area seems to be bringing out that type of stuff. Now, as we mentioned before, we don't really expect tariffs to come through to the consumer in the US until somewhere around October. So just keep that in mind when you're looking at markets. And of course, at the moment, people are purchasing into this problem. So effectively, we're seeing most people buy before they get hit by tariffs. And this is the normal reaction. Generally, when you know tariffs are coming or they've already been implemented, the supply chain takes somewhere between 3 to 6 months. Nowadays, of course, we already knew it, so 6 to 12 months. And that usually means that these companies get these record sales and then suddenly demand collapses. So don't be surprised about that, guys, when it comes to markets. Another thing that I thought was really interesting, and this just shows the cost of living and how much of a crisis we're in, is the share of young adults living with their parents. I still think this is a shocking chart. I put it over on our X account, and it just shows you, it's been a long time coming, this problem, since the 2000s all the way to now. The cost of living, particularly in housing and dwellings, has gone up. And that's what happens when we treat it like an asset class, which rather than just more of a basic human right, I guess you would say. Now, let's go through to what's going on with volatility. So you guys know that I am a little skeptical of Q3. Now, the reason why is I've always been skeptical of Q3 every year. Why? Generally speaking, we get a pullback. When does it happen? Well, that's the good guess. It could be August, could be September, could be October. But traditionally, you do see a lot of volatility. Now, this is kicking off volatility season. I would argue volatility has started to pick up. And obviously, we are currently in the euphoria meter, according to the latest Barclays report. So effectively, when you're here, you can see epic squeezes. You need to start watching the leaders, and a concentrated market is generally what you're in. And we've seen it all before. We've had it back in 2021, which went absolutely ballistic and then collapsed in those stocks. We've had it, of course, back last year in semiconductors. We all know what happened to semis. They fell for quite some time, and then they've come back. But right now, we're watching two particular charts, which we'll bring up very, very soon. The other thing is post-election years, August generally is weak. Now, that's a stat. It doesn't mean it's activated. So do remember, it's a stat by itself, but it is certainly there. And this is, of course, what tends to happen in the 4-year cycle. So you can see here, this is usually where you start to see weakness. But if you're actually arguing it, and you could definitely make this case, we often top around the middle of August and then see sell if you're following this particular chart. So again, it's all about timing and it's all about flows, and we are looking for more dark pool transactions. Generally speaking, we want a ton of S&P ones, a ton of NASDAQ ones, and we just don't have them. I want to see Wall Street actually selling their positions. It just doesn't seem to be happening en masse like it did last time with the pullback. So we are looking for that. Some other markets, remember, abundance mindset is a super powerful thing when it comes to investing and trading. We're all about that here. If you feel like you've missed a semiconductor, who cares? Move to the next position. It is not about looking back, guys. It's about looking forward in markets. And this was one of the biggest things I learned in investing and trading from very rich people out there. Always come from an abundance mindset. We have been seeing net liquidity injections in China as well, and it's starting to look like it's picking up a little bit as well. And of course, just recently, we've seen that that abundance mindset move into crypto. Everyone hated crypto again. And then all of a sudden, boom, 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 we've got massive pickups over the last couple of months. Now, when do we expect Bitcoin to top off? Well, you would actually usually expect it at the end of this year. And that's based on, you can see here, halving analysis. Now, you guys know I like halving analysis. I know a lot of people say, it doesn't work anymore. Well, I would argue that this chart was done a while ago and it has been working. And of course, we used it to figure out Bitcoin was probably going to 100K all those months ago. So at this stage, it does look like we've still got a little bit of potential leg here in crypto to get everybody involved in it. But Ethereum just absolutely proved that we may be even entering into some form of alt season. That was a wild move, and it was very, very quick, the nature of crypto. So now that we have an all-time high here on S&P 500, what do we do next? Well, you've got to kind of face it. 6,200 is a big deal. That's going to be really where this current structure would break to the downside, at least on the daily. For now, the bulls are in control. And as you guys know, it is quite extended. There's no doubt this is one of the fastest rallies of all time. We know that by statistics and facts. But trying to predict its failure requires multiple months of usually options. And at the same time, you don't want to be shorting it unless you have a signal. And we don't have one. Even like last week when we're talking about it, we would have, with the engulf, we had to break to a new low. We didn't do it. If we did, if we did and then failed, that probably would have been a failed trade. But in this case, it didn't activate. And we do want to see an activation here of at least some form of selling. On the futures market, here are the options highs and lows. And as you guys know, at this stage, when you get a new all-time high, generally speaking, there's usually a little bit more strength behind it. I will say we're very extended on some of these things. But that being said, the wall of worry is a powerful investment tool, and at this stage, it is still going up like that. Let's have a look at the positive gamma. We closed above 64. As we were moving above that, we went, of course, positive gamma. The whole day was mostly a squeeze, and we now see 6480 plus to 6500 being the next level the market wants to go to. So are we there yet? Not really. 6480, 6500 is where the next calls are. So basically, we moved into positive gamma, and you can see here it just shredded. So basically all the puts kind of have been taken off, or they're not really active anymore. Everyone's jumped into calls. Tesla, something similar. 350 is the next level, which we know. And then after that, 380. So 350 is kind of the gravitation zone for Tesla based on options alone. And Nvidia is still looking good for 185. I mean, it's what it is. So again, you look at these prices, you see what's happening, you look at the flow. And one of the things that I always heard from Stanley Druckenmiller, who's one of the best investors of all time or traders, is that, of course, you can change your opinion over, he always says, I reserve my right to change my opinion in a week or two, depending on the flow. It's very important to be able to be flexible like that, guys. Like, say you think, oh, I'm really bearish on gold, and then gold consolidates and breaks up. The fact is that you are probably wrong in that situation. Are you going to come from the abundance mindset and recognize the new opportunity? It's very important to always do that when it comes to trading. Let's now have a look at the lead indicators. First up, yields. Not too much movement based on the inflation because it came in exactly what expected. So again, we expect rate cuts to come from the Fed, and the US dollar kind of just held its ground. Needs to break above 98.9 to really start strengthening to 101.60. Do remember this is an incredibly crowded short, so that's why we've been neutral bullish on it, because we basically don't see that it can go down too much more if everybody is trying to short it, and everyone was trying to short it. Remember gold? Everyone was buying it only a few months ago. We've been buying it a lot longer than that, but everyone was doing it. And when everyone started doing it, what's it done? It's done nothing. It's done absolutely nothing. Now, another one that we've been talking about, iron ore. So obviously iron ore miners, etc., starting to see a bit of a tick up in the last couple of weeks. And you can see here what I mentioned by gold. This looks like either a pennant or an ascending triangle. So at this stage, gold is consolidating. It's got what we call a pit. And remember, the longer it sits, the more explosive the moves usually are. At this stage, I'd be still more bullish than bearish, looking towards 4,000, 4,200 ideally for gold. Now, at the start of today's video, we mentioned this particular chart here, which is, of course, the top 10 stocks that have pretty much just been the whole market in recent weeks. Now, we do eventually expect rotation. Now, we've talked about in the previous video the idea that when breadth is so thin on the NASDAQ, that while it does usually bring a pullback, it often leads into further strength in the markets. And remember, the statistic is quite bullish. We've talked about semiconductors also being a very strong kind of point in these markets as well. But I think this chart may be one of the most important to be watching. It is in an upwards channel here, and you guys can see it's just tapped the top of it again. And this is such an important chart. Like I just really feel like this one here shows you the current strength or weakness of the market. And boy, oh boy, has it been pretty strong. Now, another chart that we brought up was Russell. So you can see here the Russell is breaking above this previous consolidation. There's obviously a supply here on the left-hand side or a resistance zone. And we are starting to see signs of the Russell really trying to move forward. So for me, it's all about outperformance. Is the Russell, or does it have enough flow in it? Some people after the last 24 hours will be buying with a stop below that last low. But you do need to remember, as a ratio, until you get past that 0.36, you're not really outperforming the SPY by enough. And you've got to look at the history. Let's just quickly zoom out here a little bit on the weekly so you guys can see it. The Russell has been a horror show for a very, very long time. So when you really zoom it out, guys, you'll get a bit of an idea of how bad it's been. And remember, it has this epic downward trend line as well on it, which isn't even close to showing outperformance. So there's probably a lot of room in the Russell should it actually start to find ground. And you guys can see we're looking for a 0.36 plus ratio for it to actually be active. But on the chart itself, if we go back to that for a second, I think some people will like this close and they'll try buying with a stop below the low. It's risky, but it is what it is. At least it's in the direction of the overall trend. Silver looks okay to me. At this stage, we're still same as the last 24 hours, so still looking at it generally bullish. And oil is kind of falling off, showing that we're probably going to need to get rate cuts, and also the economies are not as good as you may think. It's basically just AI, and they just keep saying AI. So as long as everyone's saying AI, it seems to be okay. And the big 10 stocks are absolutely blitzing. It's all good if that's happening. Tesla, you can see here, rallied above this downward trend line. So far, so good. Seems to be catching a bit of a bid and some gamma squeeze. Nvidia still remains bullish, no low, so no change in trend, guys. It's still bullish at this stage. And one other one that I thought was interesting was the relationship between coin and ETH. So often if ETH goes well, coin plays catch up or goes with it. Now, we haven't really seen super strength out of coin. Obviously, we mentioned this in the last video, but it kind of points towards maybe an alt season coming. What do you guys think? Let me know in the comments down below. Is alt season upon us? The one that everyone keeps saying, oh, it's coming, and then it never comes. It's been a while, but traditionally in halving cycles, it's been this last kind of 3-4 months of the Bitcoin cycle that has brought out the hyperbole kind of, everything in crypto's back kind of market. So it's very interesting. We might have to bring a couple of extra charts in for that. Another one is, of course, China, new high here, not high, but definitely new high. And it's coming off that 50 moving average. So, of course, I'm always a fan of that type of zone. As we mentioned, the Russell, so we don't really need to go through that one again. And NASDAQ, all-time high. So, again, strength is strength, and that is what's happening. So, it's currently squeezing. Is it overbought? Yes, it is. Are most metrics screaming it's overbought? Yes, they are. But that doesn't mean we saw enough movement for flow down. Remember, you've got to get underneath these levels to really get this market to do anything bad. So for now, it's still by the dip, even if you think it's absolutely unrealistic. It is what it is. Markets can stay irrational longer than many people can stay solvent. Let's move over to ETH. Now, I do think this one hit a very clean target. You'll notice in our last video, it's exactly where we put it. So it's kind of nice when you see, a line that you've put in the air, which obviously is based on some decent analysis. Hit it and then sell off a little bit. That means you're usually getting a decent technical zone. And I always like to see it, even after all these years, because it means that, yes, somebody did believe in that zone. And that level was actually rejected a little bit. So is this important? Absolutely. I would believe that we should be going into a pit here, but crypto is in bull. So it's bull daily, bull weekly, bull monthly. There's no reason at this stage to say that this is dead or dying or anything. It's just a critical level. Some people will take some money off the table. If you got here, well done to you. But what a movement in flows. Wow, Ethereum coming back from the dead just out of that. Now, what about Bitcoin? Well, it's certainly not done anything particular. It's still kind of moving up, but again, 122 plus, that's probably where the short squeeze starts to appear. So that's basically where, people that are trying to short it get levered up, and that is going to be, they have to close their positions, which end up being buys, and you guys know how it works. So it certainly could be that Bitcoin can do that, but for now, finding a little bit of resistance up at the top. Now, you may think news is over for this week, but we still do have the PPI, which is often considered in front of the CPI, so we'll see what happens there. And then we've got a couple of bank holidays and core retail sales for the US coming through. So it's expected that they're going to be relatively strong. And if they obviously show weakness, then that could be a big one. And then the Fed uses the UOM, consumer sentiment and inflation expectations. So they're coming Friday. So the news isn't over yet. Make sure to subscribe if you enjoyed today's show, and definitely follow us on some of our other socials as well, whether it be X, LinkedIn, etc. And if you're interested in finding out more about replication trades, how to get rid of the bias that you may have, which is one of the worst things in markets, and then just trying to trade with the flow, with the movements, invest that way as well. Check out some of our courses. I'd have to recommend the Day Trading Masterclass or Advanced class if you want to go more into the macro side, which you guys know I do love. Thank you so much for watching. I really appreciate each and every one of you, and we'll see you in the next one. Bye for now.